Hey everyone, how are you? Welcome to the Global Corporate Venturing event, and this session is called Investing in Japan. So we have the great panelists here. So before starting, let me share some statistics about some booming Japanese market. So in this first slide, it shows the how the Japanese VC market is growing for the past 10 years. In the 2012, it was only around $600 million, but we see a lot of growth in the past 10 years, and we project that we're going to have around the $6 billion market, and this is and also for the first half of this year, it's already 1,045 companies has been funded, and we see the funded number will be doubled for the rest of the year. And the financing amount per company is also growing. Here in the top, it shows some average funding amount, and it was only $0.8 million 10 years ago, but it is now getting to the $3.8 million. And there is some major reason for this kind of growth. One of the big reason is that a lot of private equity guy or international VC is started to invest money into the Japanese startups, like KKR, Bain Capital, Carlyle, Sequoia, you name it. And there's many attractive, interesting technology startup and also internet service startup in Japan. For example, this Fiverr. This is a unique textile company that has made some textile that has the same protocol, protein structure as the spider thread. And this TBM is also another interesting company. They are using limestone as a new material to replace the paper and the plastic. So there's a lot of like smart news is internet services. Hey is payment platform, and there is a lot of fintech or medical equipment, and also a material company in Japan is raising capital. And recently, according to the Startup Genome, Tokyo has ranked number 9 in the startup ecosystem market. It was 15 last year. It was not ranked previously, but it suddenly is ranking number 15 last year. And now Tokyo is ranking number 9, and so we getting a lot of attractions from the venture community internationally. And the last slide, we also see a lot of Japanese corporation is playing some significant role in the Japanese VC market. Right now, so far, almost 30% of the money is coming from the Japanese corporation. And in the last year alone, 1,900 company has done some kind of collaboration with their startups. So you will see how the Japanese corporates are interested in investing and also having some strategic relationship with many of the startups. So we will dig more. We will have more deep dive on like why and how this is happening. And at the end of the day, we like to come up with the whether it's a recommendable place for the international CV to invest, and what is the must know or must go place. So we're going to have some panel discussion based on this. So let me just turn off the slide. So, hello again. My name is Ken Yasunaga. I'm the founder and managing partner of the Global Hands-on VC. I'm also doing some head of the global committee at the Japan Venture Capital Association. So, we have the great panelists here. So, let me ask of each one of the panel to introduce yourself. So, starting from the David-san, よろしくお願いします。
Thank you, Ken. My name is David Milstein. I am managing partner of Eight Roads Ventures Japan. We here in Japan have been investing in growth stage ventures. This is our 10th year, managing just under $500 million across a couple of funds. We're actually part of a global network of funds that cross Japan, China, India, Europe, and then under a different name called F Prime in the US. We generally invest in technology and healthcare, and around the world about 50-50. Here in Japan, we're probably 80-20, maybe 70-30, leaning towards technology. We generally write check sizes between 10 and $15 million as an initial check, and are really focused on that growth stage of investment.
Great, thank you, David-san. Okay, so next one is Shinji Asada-san.
Hi everyone. My name is Shinji. I am the co-founder and CEO of One Capital. We are an enterprise SaaS focused fund. Early stage Series A is our sweet spot. I used to run Salesforce Ventures here in Japan, so I know a thing or two about corporate VC. And before that, I used to be a part of Itochu Technology Ventures. It's sort of a hybrid venture capital with the parent company Itochu chipping in a significant amount and fundraising from outside. So I can talk about both worlds. And for One Capital, as I mentioned, our fund size is about 165, 500K to 5 million initial check. We will do follow-ons. And I will probably deep dive into this topic, but enterprise SaaS is just blooming here, as you have seen all over the world, but especially in Japan. There is $100 billion TAM here in Japan in terms of enterprise software, and only about 6% is enterprise SaaS. So there's a lot of growth waiting to come. So really be honored to join this panel, and let's make this interactive as much as possible. Thank you.
Okay, great, Asada-san. Well, just to everybody to know, Asada-san One Capital is probably the largest. They raised the largest amount by the first-time fund. They just recently raised 165. That's really a big news in the Japanese market. So Okay, so next, I'd like to introduce Naoki-san.
Hi, hello everyone. My name is Naoki, and I'm a partner at Global Brain. And I'm based in London, and actually I'm heading our Europe activities here in London. So then Global Brain is one of the largest VCs in Japan. So our asset under management is about 1.3 billion US dollars. And we are early stage focused fund, mainly Series A and B. And actually we manage multiple funds, including our Mothership Pure Investment Fund, as well as 8 CVC funds. So then hopefully I could add some perspective from a kind of person living in UK and investing in actually a Japanese person living in UK and investing in Europe. So yeah, nice to meet you all.
Yeah, thank you, Naoki-san. Well, and also for everybody's reference, Global Brain has a very strong background or very history about doing some corporate VC together. So, like for example, they tied with the KDDI, and they have like 2 LP fund, or shall I say single LP fund or 2 LP fund. So they are doing the great job in managing a lot of CVC money. Is it right, Naoki-san?
Yes, that's right.
Okay, good. All right, so let me start this Q&A session, and then everybody see this this exponential growth in the past 10 years in the Japanese market. Although it is still small as compared to Japan and the US, but it's certainly it's a growth, it's 10x growth. Just like to understand why this is happening. Why suddenly this past 10 years? What happened to Japan? Maybe why don't I start with the Asada-san, since he has a lot of faces, Itochu and Salesforce.
Yeah, so I started venture investment probably 10 years ago, and back in 2010, right, 2-3 years after the Lehman shock thing, I think the market just crashed everywhere globally, but Japan sort of did not crash because it was so small. So within the decade, I think it's fair to say that there's more entrepreneurs taking more risks because these people experienced Lehman shock, where these entrepreneurs used to work at big companies and that was too big to fail, and they failed, and they thought they were going to be working there for life, trying to become a kacho, or a manager, or a general manager, right? And that pathway was actually not there, right? So a lot of talented, experienced entrepreneurs have started to, do entrepreneurship. And then, just from an enterprise SaaS perspective, we saw about, I don't know, $5 billion IPOs recently, right? And that is significant in the mother's market, which is like the Nasdaq equivalent. A typical IPO would be around 10 million in annual revenue, 80 million in market cap, and then it'll pop first 90 days and it'll just go down and stay flat. But these recurring business models that I co-invest a lot with David, Eight Roads, it's recurring, it's sustainable. Market cap keeps going up to the right if you're maintaining churn and all that stuff, right? So you have these iconic success stories out there, right? And then working at a large company for life is not the coolest thing on the radar for these talented members. And then you have bigger funds like Eight Roads. They're fully funded by the Fidelity Group. I don't know how much cash they have. And then, as you mentioned, Ken-san, we were very lucky. We started fundraising amidst COVID, which I thought was the worst time of the generation of this past decade. But I was lucky. Microsoft Satya, I think, is famously quoted for that digital acceleration just happened in 2 months, where he was expecting it to take 10 years, right? So that was a huge momentum push for me. So it was not easy, but it was not that difficult raising a $165 million fund. So I packed a lot there, but.
So actually, the quality of the entrepreneurship, and also the fact that many of the startups has had a great exit, so the return itself is a good way to attract many investment in both the VC side, OLP side, and the corporate side. David-san, you also had a longer history. You invested in since the early 2010 or maybe earlier than that. So what's your analysis on why this growth is happening?
Yeah, it's interesting. I think Shinji starting his fund around enterprise SaaS is in a way like almost too late, because it's not too late in the sense of the fund, but like this is something Japan needed 10 years ago, because as we thought about how to initially why was Japan going to be interesting 10 years ago, I think we looked at several different things, and the first one was just there's a shrinking labor force. So all that tells you is you've got to find a way to increase labor productivity. I mean, there's two paths. You either increase labor productivity, or you just turn the lights off and shut down. And since the latter wasn't going to happen, we knew labor productivity had to increase somehow. And I think in a way, earthquake back in 2011, shook people in a way that probably was far more than the actual physical shaking of the ground. I think in that whole lifetime employment that Shinji was referring to, it's one of those things that people said, wow, this isn't real. Like this social contract I have with these companies for lifetime employment isn't real. So suddenly the idea of starting a venture, the risk reward trade-off between, I've got this security of lifetime employment and I don't, the risk reward trade-off changed. So you had all these kind of factors coming together, and now suddenly, you do see this massive labor shortage. You do see companies need to get more efficient, and SaaS is that driver that's just, it's clearly going to keep going, and there's no reason to think that there's any end in sight. And I know Shinji referred to the TAM, but I'm not even sure what the TAM is in enterprise SaaS right now, because think of all the low value added jobs. Take every bank branch, take every insurance salesperson. Why do you need a person to do any of this? And so I think that's the real driver. Is there's just so much opportunity for efficiency and increased profitability, and therefore better GMP growth and all those other good things. So that's really been the driver for us. So just those macro factors just scream that this has to happen. And if you look at the history of Japan, there's so many, there were so many entrepreneurs post World War II, and suddenly you kind of had this, just lack of new innovation for many years. So it was just time, and it was one of those things where I think a lot of things have come together, and in a way, the entrepreneurs came, the capital was late. Now, the entrepreneurs are increasing. Maybe the speed that the capital is coming in is a little faster than the speed that you can get quality entrepreneurs. But that's one of those things that it's never going to be in perfect sync at any moment in time. But I think it's one of those opportunities where, if you were investing in the micro or the macro in Japan, you might kind of yawn. But if you're investing in the micro, which all of us do, there's just so many pockets of opportunity.
I got it. So, I see, Japan is sometimes famous for the social problem. We have the decreasing populations and also elderly society. That really leads to the end of the lifetime employment, and that is provides some necessity for the people to set up the new company. You cannot rely on the large enterprise, and also this lack of labor force will stimulate some new business to born in Japan. That's a very interesting analogy. Naoki-san, you were I don't know where you are in the past 10 years, but assuming that you are in UK or some other parts of the world, what did you see in Japan from the outside perspective?
Yeah, actually, so since Dave-san covered most of things I wanted to say, but one thing I want to add is actually Japan has been looking into the US and innovation happening in the US, and so in the past decade, for example, so iPhone beat the Japanese smartphone manufacturers, and also Spotify came into Japan to beat those small music services and so on. Then I think Japanese companies, corporates started feeling some kinds of fear. So then actually following a global trend, then corporates started investing in startups as a tool of kind of open innovations. So that's kind of another, power in Japan to push a startup ecosystem up to the next level. And during this past decade, I think a Japanese government, especially in Kujei, so Ken-san, so played a great role to stimulate the Japanese market as well. Then now, so that was a kicker to kind of stimulate the Japanese startup ecosystem. Then from there, so many more financial institutes and also corporates are more and more interested in investing in the Japanese startup scene. So that's how I see it.
I see. Got it. Just for everybody's information, in my previous life, I used to work at the company called INCJ. That is the government fund. I was a managing director of the that in the venture market. So that's what the Naoki-san was referring to. So I think Naoki-san, you touched on some interesting point. The fear factor was one of the driver for the corporates to make a startup investment. I mean, just to dig more into it, why it is a fear factor? How did it respond? And why corporates? Fear factor is one of the things. That is there any other reason for corporate to pour money to the startup?
Yeah, actually, so I have been with Global Brain for about 6 years, and before that, I was in Sony, and I was actually in Sony's R&D. So at that time, so we tried to compete with these, of course, Apple, Facebook, Google coming to Japan, so on. Then what I found was for there are lots of decent researchers and engineers still in Japanese corporates, but they don't have enough kind of I would say product manager mindset guys who can build a business from new technologies and so on. So then kind of Japanese corporates were stuck and struggling to come up with new innovative ideas. Then I started looking for new ideas outside of the corporates.
Right.
So then, of course, at that time, startup was booming in US, then other countries. So that's why they started to follow this trend.
I see. Got it. Asada-san, Shinji-san, you are also belongs to the corporate, whether Itochu and Salesforce. It's kind of interesting. Itochu and Salesforce has a different agenda. What do you see? Why they accelerate or accelerate their corporate venture investment in each of that company?
Yeah, I think I want to be very candid. I think I had a better experience at Salesforce Ventures than at Itochu. The reason why I say that is if you look at the corporate VC from the lens of an entrepreneur, you want to know what those VCs add value or what their strategy is. And it's confusing, right? Because Itochu has their parent company doing direct investments.
Right.
They do LP investments. They have Itochu Technology Ventures. So if you are a CEO, you're like, what the hell? Who should I talk to? And then at Itochu Technology Ventures, it is a good firm, but it's sort of a rotation thing. So I was there for about 2.5 years. I was about to get picked back to headquarters and just lose my job as a venture capitalist. I didn't want to do that, so I jumped ship to Salesforce Ventures as a professional investor. At Salesforce, everybody is a professional investor. A guy came from Google Ventures, Battery Ventures, right? And they had track record, they had deal flow, they had the connections, right? And they are a Salesforce Ventures guy for their entire life if they want to be there, right? There's a good incentive system. You're connected to the network, and you're very, very strategic. You want to add value to the entrepreneurs by investing in them and having that product connect to Salesforce. So the entrepreneurs knew what they were getting, not only capital, but access to Salesforce customers, right? And Salesforce Japan is doing 1.2 billion in ARR, okay? That's bigger than Zoom when they went public, just in Japan. So if you have a partner, an investor with $1.2 billion of annual recurring revenue, you want to tap into that network because they're using cloud, right? Salesforce, and you want to add value, right? So it's very, very clear and sustainable. So as an investor, I had the joy and luck of investing in a company called Mercari at Itochu. But what was the strategic value that I brought to Mercari? Literally zero, besides capital, right? I don't think that's sustainable. But at Salesforce, I invested in Sansan, the business card management company. All I did was connect Salesforce's existing customers to Sansan. Same with Free, same with Yaply, because we had a system and we had a responsibility that was divide and conquer, right? I would invest. There was an alliance guy that would connect my portfolio companies to the direct customers that Salesforce had. I didn't have to do that, right? Because I was an investor. But at a lot of the corporate VCs, maybe globally, but especially in Japan, I think the message that these corporate VCs send out to the entrepreneurs is just mixed. And I think you need to fix that in order to be sustainable, enduring, and helpful for the customers who are, in this ecosystem, which is entrepreneurs.
I see. Especially, Salesforce, I fully understand. They have a lot of value that they can bring to the table. Let me ask this question to David. You are the pure financial investors, and you work together with many of the corporate VC in Japan. Do you see any change in the behavior on how to bring value to the company?
Funny. So I think I definitely put myself in the same camp as Shinji in terms of my perspective on many of the corporates. And one of the things that I try to push hard on our entrepreneurs, and I know it's hard for entrepreneurs to say no to cash, is if you want to bring in a corporate investor, get them to commit to deliver on the synergy. And the conversation I usually have with the entrepreneur is around the idea of, okay, if our share price is $100 today, we're going to set out a plan for the next 12 months together about what you as the corporate investor are going to put into our business and how you're going to help us grow. And if you deliver against that plan, you can invest at that $100 stock price that we're selling the stock at today. You don't have to pay for the value that you help create. And until entrepreneurs start to hold corporate investors responsible, I think as a number of people have referred to, just this idea of it became the trend to follow for corporates to start a VC fund. And so that's great. You got to start somewhere. But once you've started, you've almost got, as the entrepreneur and other financial investors, we've got to enforce on the corporates this idea of, if you're claiming you're going to bring value, bring the value, then you can invest in order to really kind of drive that kind of action. And I think once you start to see that happen, you're going to see a real differentiation, probably bifurcation among or between the two types of investors, which are those corporates which are just trying to throw some cash something and see what happens, and those that actually are putting in some real effort into building a relationship. And I can look at, for example, one of our recent investments in Paydi, where PayPal was actually not an early investor, a relatively recent investor. We built a ton of business together with them, and they ended up buying the company. That's super rare here in Japan, and so, but that was because it was a relationship that both parties cared about, and it was something where PayPal wanted to drive a business agenda together with Paydi, and Paydi wanted to drive a business agenda together with PayPal. So there was this business piece of it, and that was well before the M&A transaction. And so I think, seeing some of those positive examples of what happened, and I think, as Shinji points out, I think Salesforce has done a great job across this market of coming in and in a way, having some great leverage across a huge customer base. Those types of examples are good, but if you look at both of them, Salesforce is a US based company, PayPal is a US based company. At some point, Japanese companies need to kind of figure out the formula, and I think we're probably not there yet, and I don't know when we'll get there. I don't know how many multi-billion-dollar acquisitions by foreign firms it's going to take for Japanese companies to wake up and see that if they want to find a path to dynamic growth through acquisition, like this is the way to do it, but you get out what you put into it.
I see. Got it. So I think it's true that in general, corporate VC can bring a lot of value to the startups, and Salesforce Japan and PayPal has done significant job, and that has led to the great exit on each of the portfolio. I think that's great news, and also we understand there are still a ways to grow for the Japanese corporation. Maybe, Naoki-san, could you maybe comment on the Japanese side? Are there most of the Japanese behave like that, or there are some certain Japanese corporate is really bringing a lot of value? How do you see the market?
Yeah, still I think so. Of course, we work with many bunch of CVC funds as well. But, still, it's relatively at the early stage. So of course, they now established many CVCs, but they haven't figured out what to do with it. So that's a main kind of the many corporates are like that. But among these, of course, some corporates are kind of way ahead. Like for example, KDDI, once they invest, they do lots of supports and of the portfolio, and they try to help startups to grow. And so eventually, of course, they acquired some of their portfolio as well. So this kind of things. So hopefully, we could see more and more in the coming years. But still, we are not quite there yet. So that's our current situation, I think.
Okay, great. So we'll talk more about corporate VC related thing later. So let me talk more about why Japan. What's unique about Japan? Asada-san, you touched upon the Salesforce. I mean, SaaS business model, and we touched upon the lack of labor force is one of the area. I mean, what kind of CVC can bring value is also another topic that we what kind of guy should come to Japan. So let me ask this question: where is unique about Japan? Why which industry segment do you see some opportunity in the Japanese market? Let me start with the David-san.
Yeah, it's interesting. So I don't spend a lot of time kind of thinking about how CVC should come in. I think you've seen some interesting activity from places like Google, who both invested as well as purchased several different companies, not huge acquisitions, but nice acquisitions. I think anyone who's looking to build their enterprise footprint in Japan, it is a significant opportunity. I would say in general, Japanese ventures, particularly in the enterprise space, tend to be super strong in product and maybe not as strong on the business and sales side as you would see in other markets. So a company that comes with a really kind of strong sales and marketing proposition, and you put that together with some great product, I think there's definitely there's room for growth there. But again, I also think that many Japanese ventures are not so ready to have huge partnerships. So what are those small partnerships you can build, whether it's from a product, whether it's from, I think as Shinji was referring to, from a customer base perspective, just those small steps that are part of growing the business. So you don't have to change the business as part of investment, but you do have to try to grow the business or add something to the business. So, we've had investors who've come in with, who just have, maybe they've invested outside of Japan in similar business models, so they've just got some great insight. What will work better? What are some of the different approaches? What didn't work? And so those types of people who bring some of that experience. I think Salesforce is a great example. I think Google's been a great example. You don't see so many other really really big examples of that right now, because it hasn't been a market where a lot of non-Japanese corporates have invested super aggressively. But that to me is the space, is what learning can you bring to a company where your investment suddenly is super valuable, just because for most of these ventures, it's not about what you do, it's what you don't do that saves you so much. And so I think that kind of learning and support is really a piece of the opportunity.
Okay, got it. Thank you. Asada-san, let me ask your answers.
Yeah. So obviously, I am in love with enterprise SaaS. So that is the big opportunity. Again, I want to emphasize there is a $100 billion market here, dominated by large companies like Fujitsu, NEC, and Hitachi. And I am a true believer that this system integrator model is totally broken, because you're not incented to help the customer, but to actually get revenue from the customer. So sort of like a leech, right? You're feeding off of their blood. Okay, that's the hard truth, right? You see that everywhere with all the software that's being used at big companies, right? Why would you want to build an expense management system just for your company? Just use Concur, right? So the market is booming, right? And just going back to a little bit about what David said about value add, right? So, of course, I can only speak about Salesforce because that's been my experience. But there are lots of companies that have learned and copied the practice of Salesforce. I can give you 10 examples, but I'll just stick to several, right? Atlassian Ventures, right? And so I think corporate venturing, I think there's three elements. So within Salesforce, we called it corporate development. Okay, that's the organization name. There was Salesforce Ventures, there was the M&A execution team, and there was the post-merger integration team. This is what constitutes corporate development. Same as in Google, okay? I mean, Google's a little bit different because they're generating like, I don't know, $10 billion of cash, which has to be spent some way, right? Because they're going to accumulate too much cash. So that's actually the real story behind Google Ventures, right? So, but they've realized that they need to be strategic. So Google's corporate development team has been very active, only investing in strategic deals, right? And then they have the M&A arm, and then the PMI arm based on search, Android, hardware, and stuff, right? So the tech company has really embraced how to do corporate venturing. And I think even large companies like, I can't think of it, but like maybe Disney, I don't know. I think they have a corporate development arm. They bought the streaming company BAM. Now they're a great, amazing streaming company, right? Because they were sourcing content to Hulu and Netflix and getting only a fraction of the profit, right? So they're like, hey, we need to buy a company. So this wasn't venture investment. This was a pure M&A deal. But they have a corporate development team scouting for products out there that can leverage your content and brand, right? So I think this session is about global corporate venturing. So if there is some the majority of the audience is about corporate venturing. I think these best practices just copy and paste and then be iterative versus just trying to do something on their own. And sadly, I've participated in the Japan Venture Capital Association like study seminars and stuff, and I would ask a corporate VC guy, "What's your strategy?" And they're like, "I want to invest in space tech." And I'm like, "What do you do?" I'm a real estate company. Okay, space tech? So are you building something in space? And they're like, no, it sounds super cool. I think it's the next generation thing. Yeah, it is the next generation, but like, how does that benefit your customers? Your customers are on the ground, right? And it's like, no. Space tech looks so like these conversations does not make any sense, right?
Right. Yeah.
And they have no idea what to do, how to value add in a space tech company. Salesforce knew literally how to build a sales team, how to generate recurring revenue, how to keep customers happy from a digital standpoint, from a data standpoint. So we knew what we were doing. So our diligence was quick, but we knew the companies that were hot or not hot. So then your financial returns looks great, right? So we were in the middle of the SaaS ecosystem, and Bessemer Ventures, Benchmark, Battery Ventures, they love to invest with us because Salesforce brought the product value and the distribution power to the entrepreneurs that these independent VCs with larger checks doesn't have, right? And now it's a bigger force right now. Salesforce Ventures, it's continuously increasing.
Yeah, it's great. Okay, Naoki-san, could you share with me what's the top hot segment in the Japanese market?
Yeah. So actually, from my perspective, market dynamism in Japan is quite similar with in Europe maybe 5 years ago or something like that, I would say. So that's why going forward, I think so deep tech, of course, startups and also fintech will be very interesting in Japan. So of course, as you guys may know, so of course Japan has a lot of tech-oriented universities and research institute. There's still, of course, a bit lack of talents in business side and the product management side. So that's why we have to train more people in this segment. But once we do this successfully, then we could see more and more kind of business coming out from universities and academia like happening in Europe. So then these guys, of course, then Japanese large corporations, there are lots of deep tech large corporates as well. So then once they figure out how they can help startups, as Shin-san mentioned, then I think Japanese deep tech scene will be more and more interesting. That's one thing. Then another thing is so fintech, of course, still compared to US, Europe, maybe 10 years behind or something like that. But now, so lots of startups started thinking about how they can kind of bring this kind of innovation from Europe or US to Japan. Then they are doing the so-called time machine model or something like that. But then I think, so as David-san mentioned, the PayPal acquired Payday, right? And also Google acquired Plin. Then now lots of global corporates started looking into Japanese fintech space, and as a still third largest economy in the world, definitely fintech should be big once we figure out how we can bring these innovations, adapting the Japanese, of course, finance-related laws and so on, regulations. So that's my perspective.
Got it. Thank you. If I may add to everybody what everybody's thinking, I think just like Naoki-san touched upon, I think there's some good possibility in the deep tech area. There's many of the science university is try to come up with a new product, and they want to have form the team. I just started this global hands-on VC together with one serial entrepreneur in the Silicon Valley, and also very famous venture investor in Japan. And our force is to help these Japanese and form the team of the business people, become the mentor, and help them grow the team, and also help them expand to the international market. And I'm doing this fundraising right now. And the one thing I notice is, if I pitch to the corporate, Asada-san, you mentioned about the corporate venturing, having like M&A office and a corp dev office. One thing I also realize is, many of the Japanese corporation, especially, technology corporation, would like to spin out their core technology and then use some outside resources or outside capital and make a startups. So in that way, many of the Japanese corporate can reduce the R&D expenses and also and to form the best of the breed team to develop that kind of technology. So if it's not the mainstream of this company's business, there's various companies started to evaluate the possibility to you know outsource or have some open innovation inside out. So that's one thing I like to add to the table. So Asada-san also mentioned about one unique thing. There's a real estate company is like crazy about investing in a space-related deal. One thing that worries me is, many corporates start to invest, and that could lead to some higher valuations. The Japan market is growing. That means more money in the market. So I'm hoping that there's enough supply of the startups company, but one can argue that there could be some inflation about the valuation for the past 10 years. And I like to see, do you? My question to everybody is: do you see this kind of increase in evaluation? And also the follow-up question is, how do you see the return profile? If you want to enter into the market, how does it different from the some international standard? Maybe I can ask David-san to answer this first.
So that's a topic that you could get me cranked up on for a long time. As a pure financial investor, when we have to compete against people whose sole mission is to just invest, not drive returns, but simply to invest, you're naturally going to have, price inflation into deals. That being said, in an odd way, the entrepreneur who selects that capital versus experienced capital, that also says something about the entrepreneur. So you just have to hope that, I think similar to what Shinji does, we have a super focused strategy around the verticals that we want to invest in, and so we want to build that experience and be able to, when we're working with an entrepreneur, our experience, our understanding, our network, and our ability to kind of deliver on what we say we're going to deliver on is real, and the entrepreneurs that believe that will have a good conversation with. But I do think that a lot of the corporates have pushed up valuations just because their mission is to make investments, and I see that. I know, Ken, you were with the government fund before, but I think the government funds tend to do that as well, and so not everybody has the same incentives, and so that's just the market. Every market is like that. There's corporate investors everywhere. There's government investors everywhere. There's all sorts of different investors everywhere. So I think similar to Shinji's approach of being super deep in Shinji's case, enterprise SaaS, in our case, across 3 or 4 different areas. It's just that depth of knowledge and experience that you hope that the entrepreneurs will understand, because otherwise, you can change everything about a company except for the price you paid for the stock. So, in that scenario, you got to make sure you're investing at the right kind of valuations. And to kind of go to the second part of your question around return profile, it's interesting, and I don't have enough data points yet to kind of reach a full conclusion. But because Japanese companies historically have tended, the successful ones that get to an exit to go IPO, they tend to get to an IPO exit sooner than you would see in markets outside Japan. So as I think Shinji was alluding to, you're seeing entrepreneurs, companies with 10 million of revenue go public at 100 million valuation, pop and die. I think you're starting to see some companies, because there's more capital, you can do that pre-IPO round, you can do that crossover round. So you're seeing companies now, we're getting the high 100 million valuations, the $1 billion kind of valuations into companies that are that are going public, and so I think, you know, the IPOs are tending to get a little bit later for some of the bigger companies, but historically exits for good companies have come sooner. So you're, from an IRR perspective, you were getting good IRR, harder to drive MOIC into some of the deals, but I think you're seeing a slight shift in that because there are more later stage investors. I think, as Ken, you showed in your slide presentation, there's some real crossover guys who are coming in saying, I want to come in pre-IPO and I want to buy in the IPO as well. So I think the return profile, you know, remains strong. I can only speak for ourselves. I think, to the extent, knock on wood, that we're going to have a fund 3 sometime next year, I think our LPs are happy with the return profile, but that's really the only way to measure it.
Got it. Thank you. Maybe Naoki-san, you have some outside view, so I'd like to hear your points, your view on this.
Yeah, so same as other countries, of course, the valuation in Japan is increasing. That's just because the money is becoming commodity, right? So that's why we VCs have to differentiate us from the others in some way. So of course, some VCs are more specialized in some specific areas. So, but we are acting as a kind of general fund in Japan. So that's why what we are trying to do is trying to build a kind of business development team internally, hiring a bunch of kind of course, ex-consultants, ex-entrepreneurs, these kind of things to help startups to grow. Of course, this is just a one way. So then there are many ways to differentiate us from the others. So that's definitely what we should be more focused on going forward. And then, yeah, so so from my perspectives, compared to UK or Europe, still there are not so many foreign investments. So investment from non-Japanese corporates or non-Japanese VCs. Of course, at later stage we started seeing more and more, but the early stage, almost nothing. So almost as those deals are done domestically. So then, but then, of course, if we want Japanese companies to grow more, then definitely, before IPO, they should go into other countries as well to expand their footprint and the business. But for that purpose, still, so Japanese corporate startups need help from non-Japanese VCs or CVCs. So that's why, so I really encourage non-Japanese CVCs to come to Japan to invest in startups, and please bring these guys to other countries to expand. Then hopefully we can increase the exit valuation more. So that's
right.
Yeah.
So thank you. Shinji, maybe Asada-san, you know, SaaS business is also booming. It's one of the very hot topics in Japan. How do you see the valuation going up, and do you still recommend the international CVC to come and play in that market? Or if yes, you know, what kind of strategy would you recommend to those international CVCs?
International CVCs, okay, that might invest in enterprise SaaS would be Workday Ventures, Atlassian Ventures, maybe Okta Ventures. Not sure if that's the right word. Box has an investment vehicle. Google, yep. But looking back 10 years, the foreign investors that were very active was Salesforce. Cisco was there. You know Yajima-san, right? He now is a Fujitsu Ventures guy. Intel Capital, they were sort of active. Asada Ken-san is now my other guy. He assumed my role, right? So everybody left those foreign investment firms and foreign corporate VC arms, and you know, became other corporate VCs, right? So it's not easy actually to try and land and expand here in Japan, right? You need a good Japan head who knows the market, who speaks both languages, who knows the tech world. So it's not easy, even if there's an opportunity. So you really have to think deep about why would you want to enter Japan. But I think if you structure it correctly, I think, you know, so instead of talking about corporate VC, all these emerging enterprise SaaS companies have a marketplace, right? Zoom has their thing called Zoom Apps. Slack has this partnership. So first start with that. And this app marketplace is a great strategy to localize, to adapt to the local markets, right? Apple's iPhone, look at it. I mean, there's, I don't know, a million apps in Japan, a million apps in Europe, in the UK, right? That's how you personalize your smartphone, right? That's the best practice. So if there is a foreign company trying to, enter Japan, first open up a marketplace so that it complements your product. Because as a global tech company or a global firm, you already have a great core product, and you cannot adapt that to the local market. Like for instance, Salesforce, it's a Salesforce automation product, right? But in Japan, pre-COVID, exchanging business cards was really important in a business scene, and you would sometimes encounter a Silicon Valley high flyer, an entrepreneur without a business card, right? And a lot of the Japanese business person would view that as obnoxious, rude, right? But Salesforce, just going back to the product story, Salesforce does not have a business card scanning service because it's not going to scale in Europe. It's not going to scale in the US. So that's why I was ordered from headquarters, Shinji, invest in a business card management company. And I invested in 3 companies locally here, right? And the product would stick to Salesforce. One was for SMBs, one was for mid-market, one was for enterprise. And Salesforce customers loved it because now there is Salesforce, there is Sansan that's interconnected, and that's how sales is done. Exchange business card, enter contact data. Then you would do, CRM. So, instead of talking about investments and returns, so my advice would be to just open up a marketplace that complements your product. And second, when you're doing investment, don't go early. Do mid stage, even do late stage. Because if valuation is not your thing, there will be mid to late stage investors, VCs, that's going to price it. Just follow. Don't raise the price. But with these big corporate VCs, they've got too much cash. So if they're putting in 5 million check, they don't give a damn about a valuation. That inflates the whole thing, right? So focus on middle to late stage markets because you have a better product at that stage versus a Series A company.
Right.
David and myself and Global Brain will focus on Series A and try to, take the risks because that's what we were, hired to do from our LPs to take bigger risks.
Got it. Yeah, that's a great point. I mean, many of the corporate VC, they can bring a lot of value, and at the same time, just like what the Salesforce Japan has done, they can increase the more sales in Japan. So that's you use a one stone with the hitting the 2 birds. So that's a great point. Thank you. Okay, so let me ask another questions. So you mentioned about we are asking what's the corporate VC, it's a good place to come into Japan, but are there some uniqueness? Are there anything that the international or CVC needs to know? I mean, is it same as going to Silicon Valley or Europe or whatever? Are there any specific obstacle? Are there any like surprising factor if you enter into the Japanese market?
I can talk a little bit about that. I think
Yeah.
that's similar to like pure Japan entry strategy, right? First, there's probably a million ideas, but like first, hire a local head. Okay, don't send an expat. Okay, who does not speak any
Right.
Japanese?
Yeah.
Because by default, if you don't speak the language, you're not going to understand the norms, even if you're a flexible, like adaptable person, right? Just hire a talented local head, and that person might not have a Harvard Business School degree, might not be fluent in English, right? But if that person is very locally connected and can deliver, just hire an interpreter or something, right? Some people, when they do Japan entry, they hire the great resumes, the great English speaker that has no local talent, right? Local capabilities. And I see that over and over again, right? So hire a great local leader. And secondly, work with local VCs. Like David is a global firm, but he's very local. Like work with Global Brain, work with Jafco, Globus, and maybe work with us as well in partnership. And be clear about what you're bringing to the table. But again, don't invest in Series A companies. That's not your secret sauce.
Right.
Having done a decade of corporate venturing, Series C, D, E, I mean, there's going to be bigger rounds at late stages with mature products, mature processes, and mature people on the entrepreneur side, right? That's what your customers are looking for. Why invest in a Series A space tech company if you're a real estate company, right? Your customers are not going to be happy if you are delivering this like high tech, high risk, maybe going out of business product. Like, what does it do to your customer base? And even if it becomes a unicorn and you get maybe like 30 million of capital gain, that does not move the needle. And it's one time, P&L impact, right?
Right. Yeah.
But if you lose that money, you are in deep trouble. So where's the risk reward? You're taking a risk, you don't get rewarded. But if that risk, becomes a reality, you're dead from a corporate life perspective, right? So I don't get it at all. It does not make any sense.
Yeah. Thank you. Anybody else like to have comments?
Yeah, I can touch on that a little bit. So first of all, Shinji, I lost money in space tech.
Did you invest in space tech? Oh my God.
But that's your job. That's your job, right? Yeah, you're supposed to.
Yeah, everyone my LPs often remind me of it. We told you this is going to be difficult, but no, I think the other point, I think you were kind of getting around it with the comment around don't invest early, which is compared to probably any other market, in general, I would say the entrepreneurs are not as sophisticated. They're not as experienced. There's now a generation of serial entrepreneurs, but they're still relatively few and far between. And so there's a lack of sophistication, which if you plug most early stage ventures into a corporate venture unit that's used to investing in the US and Europe and maybe even China, it's going to be a round peg going in a square hole. And so I think until, as Shinji was referring to, these companies grow a bit, get a little bit more kind of strength of bench around their management team, it's just going to be a tough sell in terms of you're going to speak a different language. And we had a new investor come into one of our enterprise companies a couple of months ago, and they're pounding the table because the company didn't hit their quarterly numbers. Well, most Series A and B companies don't hit their quarterly numbers. Like, that's kind of how this whole thing works. And so I think that kind of difference in mindset and understanding, that I think what Shinji was saying around go a little bit later is probably a place where people are going to feel a little more comfort. Go space tech.
I'm not against it.
Trust me, I am.
From experience, though. Yeah.
It's a great bar story, though. Let me tell you, if we could only go to bars during COVID.
Yeah, let me add some perspective to Japanese startup scene as well. So as I mentioned, so Japanese startups are more open to get the money from CVCs. Maybe one of these reasons is that they are not so sophisticated compared to entrepreneurs in Europe or US. So of course, in Europe, US, so normally startups don't take money from CVCs until maybe they become Series B, C or something like that, unless there is a strong synergy. But here in Japan, maybe from Series A, without a strong synergy, still CVCs could get in. So that's the environment. And also governance-wise, it's also not that sophisticated compared to US or Europe. So for example, so in Japan, almost all investors can get a board observer seat, for example. So in US, in Europe, so they try to restrict the number of the board up to maybe 5, 7, something like that. For that purpose, definitely if you want to get a board observer seat, you need to have more than 5%. That's a kind of a general rule. But in Japan, sometimes investors with only 1%, sometimes less than 1%, still can get the board observership. So that's why the size of the board is too big to discuss sensitive things. So that's one. And another thing is actually entrepreneurs in Japan too much care about dilution at the early stage. So globally, the kind of general standard is 20-25% dilution for each round. But in Japan, so they care always about 10%. So 10% dilution, 10% dilution. So that's from a non-Japanese investor's perspective, that would be a surprise, I think.
I see. Okay, great. Yeah, that's a very practical and some unique things about Japan. I agree with that. So I think our time is come. I think our conclusion, I guess, is Japan is very attractive and booming, and there's a lot of place that you can invest. It's important to have your local partners, or tie with the some local VC, that will enhance your ability to invest in the right company, and also you can increase the value of your Japan operation. And of course, a little bit of advertisement for Global Brain, One Capital, Global Hands-on VC. We are ready to have your LP money. Okay, all right. Oh, thank you very much for everyone for listening, and I hope you enjoy it. And please give a big applause to the great panelists. Thank you very much.
Thank you very much.
Goodbye.